Now it's time to welcome our first guest, financial advisor, Eddie Ghabour. You've probably seen him around on networks like Fox Business and CNBC. Eddie's the co-owner of Key Advisors Group in Delaware. He's also the author of the brand spanking new book, Common Sense Bull. Eddie, thanks for joining us again today here on The Income Generation.
Thank you so much for having me.
Now, I don't know if you remember this or not. I don't know if some of you remember this, and hopefully you do, but we had our market forecast show right around the first of the year where we came on and we had almost 10 advisors actually talking about what they thought would happen this year with the market. And Eddie, in the spirit of the book, The Common Sense Bull, you were the bull that day. But the rest of us that were being interviewed thought you were full of bull because you were the one person who said the market would go up in 2019 versus go down. And do you remember what you predicted, what percentage you thought the market would actually increase this year in 2019?
It's funny you ask. I think I do remember that. I
Okay.
said I thought the markets would go up by 12% this year.
By 12%.
That's correct.
And as of today, do you happen to know where the markets are relative to the beginning of the year?
As of today, the S&P happens to be just a hair over 12%.
Here over 12%.
That's correct.
So right now, you're looking like the smartest guy in the room, and I hate to give you so much credit for that since it's my show, but I kind of have to. But you do realize that in this volatile market, it means that the market really can't move for the rest of the year. It means for the last 9 months of the year, the market's got to just stay like this, like flatline. So what's your best vision as to what's going to happen? Clearly, I jest. We know the market's not going to stay flatline. Do you still think that the market's going to end the year right where it is today, thereabouts? And if so, how do you think it's going to get there? Do you think it's going to go up and then go down? Do you think it's going to go down and then go up? What are you seeing right now in the tea leaves now that we're almost 3 full months into the year?
I think we've gotten a little bit ahead of ourselves on a short-term standpoint from the market. I mean, we've gotten a year's worth of growth that we anticipated in less than 3 months. So I expect to see more sideways to downwards action in the market here on the short term until we get clarity with China in regards to trade. I think now that the market is up 12, we will not see we'll see volatility for sure, but I think now I may have to up my prediction up a couple percentage points.
Now, the most important question I have for you, and this is really the most important, so you ready to answer this question?
Yes.
Okay. Did you happen to send, regarding this prediction, a thank you note, a personal handwritten thank you note to Jerome Powell? Because, if it weren't for him pulling off the accelerator and raising short-term rates, I think the other 8 of us would have been correct.
I agree 100% with you. So that's part of the reason for our bullish call heading into the year.
Right.
We think the Fed is off the table, maybe 1 rate hike this year in the second half, and that's it. And that's bullish for equities.
So part of the reason for the prediction was because you thought this would happen, so your thought was just that. Yeah, I kind of thought the same. Only I thought that 1 rate hike was actually going to have occurred already. I thought that would occur at the beginning of the year, and then we'd be one and done. So I was expecting at this point the markets to not be looking so good. So you talked about China. So the skeleton in the closet of the Fed and what they're going to do, I think we've got some clarity there, which is wonderful. But the next skeleton in the closet, really everybody's focused on, is China. What do you really think is going to happen there? Some people say it's going to happen. Some people say that the last thing China wants is President Trump to be in for another term, so they can do everything they can to kibosh such a deal.
I don't think we're going to get a quick resolution to this. I continue to see this thing stretching out for a comprehensive deal. So I think we're going to see bits and pieces of the trade issue with China being solved one piece at a time. Okay. But I think if a market watcher is expecting a comprehensive deal done at the end of March, I would not put a lot of weight behind that.
But you think it'll be enough, though? You think that just a little piece of good news, a little piece of hope along the way is enough to string along the market participants to keep the market at kind of sort of near its current levels?
I think by the end of the year, the answer to that will be yes. I think on a short-term basis, there will be some time periods where there's some doubt on China and U.S., and that's what will cause markets to go down.
Well, the bond market's definitely helping you as long as they keep the 10-year yield down around that 2.5, 2.6, 2.7 mark. Still going to be a lot of people looking for growth somewhere else, and it makes the dividends on stocks still look pretty attractive. So when we come back, we want to ask Eddie some tough questions here about interest rates, but also about taxes, because our show is about taxes. So stay with us. We'll be back in a moment. And when we come back, you're going to learn how you can get a copy of Eddie's book, Common Sense Bull. We'll be right back here on The Income Generation. Right now it's time to welcome back Eddie Ghabour, co-founder of Key Advisors Group in Delaware, and also the author of the new book coming out on Tuesday, Common Sense Bull. Eddie, thanks for sticking around.
Thank you.
You know, during the commercial break, I dozed off for a minute and I had this terrible, terrible dream that actually admitted you were the smartest guy in the room. Did I actually say that, or was that just a bad dream?
I think you said it, and I think we have it recorded.
I think it's recorded, exactly. Oh, well. So the long-term interest rates, talk about the 10-year Treasury yield. Do you think that's going to stay low? Do you think we're in a new norm of low interest rates like Japan has struggled with for the last 25 or 30 years?
So it's too hard in this crazy time to predict very long-term on rates. I have a very high conviction that the 10-year note is going to stay low for 19. That's part of the reason why the Fed's not going to raise rates, because they do not want an inverted yield curve.
Of course. Yeah.
We get a lot of demand for our bonds because although our rates are still low in our eyes, globally we have some of the highest interest rates out there, and the U.S. is looked at as the safest paper around the globe. Mm-hmm. So we got a lot of international demand that keeps a ceiling on that 10-year bond, and that's very bullish for equities.
That's very bullish, absolutely. Okay, so taxes. If you had, since this show's about taxes, if you had one thing to tell our viewers that you find to be a popular strategy today with the new tax code, people approaching retirement who are retired, what might that one strategy be?
I tell you, with this new tax code, people are many of our clients at least, are in the lowest tax bracket they've ever been in their entire life. So we are actually aggressively looking at Roth conversions for our clients. Now, it's not suitable for everybody, as we know, but I will probably do more Roth conversion planning this year than I have in my entire 20-year career. I mean, my gosh, if you can take taxable money that you thought was going to be taxed at 20% and pull it out at 12 and have it grow tax-free for you and your family, for most of our clients, we call that a no-brainer.
Yeah, married couples today can make $100,000, take the standard deduction, and still be paying tax at the 12% bracket, which is huge. So last but certainly not least, in the minute or so we have left in this block, tell our viewers why you wrote Common Sense Bull, what they can expect to get from it when they read it, and how they can get a copy of this great new book, Common Sense Bull.
So I want to educate and empower investors. I was motivated to do this book by my coaches and mentors to share the powerful message that we've been sharing with clients for 20 years. And my hope is this book will not only educate them.
So you started when you were 13, right?
Yeah, that's right, 12. My hope is this book will not only educate but motivate people to use the same principles we use to make our correct market calls in their financial plan.
That's great. That's great. And I love what you've written. I got to see a manuscript of it before it actually got published officially, so I'm a bit ahead of the curve. Where can they find a copy of Common Sense Bull?
They can go on Amazon.com to buy the book. They can go to Barnes & Noble, and they can go to thecommonsensebowl.com to also purchase the book.
All right. Well, if the best I got on the list was number 2 on Amazon.com, and he earns his way to number 1, I think that's a great thing, because I love your book. So I'm glad you did it. God bless you, my friend. And you heard it, Amazon.com, BarnesandNoble.com for a copy of Common Sense Bull. Stay with us. We'll be back in a moment with more here on The Income Generation. I'm David Scranton. We'll be right back.